This is Mike Reynolds at Glen Mead, and you're watching Taking Stock.
The risk-off trade back here in full force on Wall Street. It does look as if the major market indexes are expected to finish basically at session lows here for the day on this, not Wednesday, Tuesday morning, election day, of course. On this Tuesday morning, the S&P 500 opened down about 1.1%. We got back some gains intraday. Looks like we're going to settle down about 1.2%. The AI trade we talked so much about on the show yesterday, not quite catching the bid it did yesterday. Palantir shares very much in focus, down 9% despite a huge beat. Maybe the picture for 2026 for the data giants is a little less clear. Don't worry, Palantir shares still up a cool 150% since the start of 2025. And all of that and so much more sets the stage for today's show. And speaking of the show, welcome to it. You're watching Taking Stock. I'm your host, JD Durkin. Moments away from the ringing of the one, the only, the truly iconic closing bell. We do it every day here at the New York Stock Exchange. Why not do it at least one day more? Today, the team from Capital Group is set to do the honors. The tail of the tape for the markets, the S&P expected to finish down 1.1%. The Dow down 0.5%. The NYSE Composite Index down 0.6, while the small caps, yes, once again bearing the worst of that off rotation, down 1.7%. The team from Capital Group is here now to do the honors on this Tuesday, November 4th. Time now for the closing bell. Always got to wait for the three gavels. The team from Capital Group here to do the honors to round out this very notable day here at the New York Stock Exchange. The leading sectors of the S&P 500, unfortunately, not many of them, but financials, real estate, and staples, the real defensive trades on the day, up in positive territory. The biggest lagging sectors in the S&P, tech, discretionary, and industrials. As for the Dow 30 components, a strong performance from Travelers, Merck, and Home Depot, with Caterpillar, NVIDIA, and Boeing leading losses to the downside. Who better to join us now, the Einstein of Wall Street himself, the truly great institution inside the institution, the one and only Peter Tuchman of Trade Moss. My man, thank you for being here as always.
Always a pleasure.
What did you see here into the close? I thought maybe intraday we'd kind of bounce off the lows from the start of the day, but we kind of fell right back down.
We did. You know what? Look, and it's very curious because the news out this morning in Palantir. I actually called at 7:30 when I saw the market down 1.1%. I called Dan Ives. I said, what's going on? Obviously, we knew that Palantir had beat across all levels, and yet that stock was down 8 and 9% right out of the gate. And so what everybody's thinking is, it's buy the rumor, sell the news. It's almost like, okay, this is signifying the top. Right, that there's, when a stock beats and gets a heavy sell interest, that means that people are taking profits. They've decided, look, there's been so much chatter over the last couple of days that this AI thing is a bubble, which is ridiculous, I think, in my opinion. And I spend a lot of time with Dan, and he is the #1 tech analyst in the world. He is Mr. AI. And he still believes we're in the second inning of a 9-inning game that's going into extra innings. Still trillions and trillions of dollars of capex. I don't see it be a bubble when you've got all the top players in the Mag 7 committing billions and billions of dollars to capital, building data centers 5 years out. I mean, there's a massive commitment into that space. So, look, there's no guarantee when a stock beats on earnings. That's the crazy thing about this volatile market. You've got so many different players in the game. And that stock, as you said, is up 150% on the year. Spectacular move. So much to it. They've partnered with NVIDIA. They've partnered with everybody. I mean, Palantir is, if they're not, obviously, NVIDIA's always said to be best of breed, but surely a close second in that wild race is Palantir.
We'll be watching all these names and much more, obviously, through the lens of seasonality. It is November, historically the strongest month of the year for equities.
Strongest month of the
You've been
year.
doing this a long time. What do you usually start to see come into play this time of year? We're inching ever closer to the holiday season?
So look, we need to understand all the moving parts that are still the unknowns that can sort of get people's focus. We still are in as of yesterday, the longest government shutdown in history. That is starting to impact a lot of things. We do have a little contention coming out of it. We had a really, the two grandest leaders of all time, right, who actually made a couple of deals last week, the president of China and president of the U.S., they couldn't hang out and be buddies long enough. Already there was a little contentious things going on this morning, so a little bit of sort of mull and marination over there. But there's a lot of still unknowns in this space. Look, the market is still trading at record highs. We're approaching 7,000 on the S&P. 50,000. I'm printing up 50,000 Dow 50,000 hats already, so that I don't miss out, because I missed the 46s and 7s. It blew through there so quickly. So we are trading at, if not 1%, 0.5% off record highs. So look, nobody can complain that the market has not performed beautifully. But you know what? There are some unknowns, and tech has made such a crazy move. Look, I think people with sort of a solid mind on markets are not really believing it's a bubble in any way, but the stocks have made a move. Why not take a little profits off the table? Nobody got broke taking a profit. We know that. Yeah. And the moves have been so significant. But anyway, look, everybody has their own risk portfolio, or quotient, and things like this. And, it is notable that with blowout earnings, I mean spectacular Palantir earnings, that it did not see the light of day today, and it was all heavy selling. So people can read into that what they want. Look, it was not a bad show. I mean, the market, look, it's off 80 handles on the S&P. It did close at the low. That is a little bit due of concern there, because when markets do suddenly flip and they close at the lows, very often we will see, I've been here for a long time. Yeah. You'll see a gap down the next morning, the follow through trade, and then we'll sort of enter some capitulation mode. But look, it's a notable day of a pullback consolidation sell-off. We're not putting there's no R word in it or a C word in it. Sure. Let's not get crazy. Yeah, it is a bit of a reversal on what people were hoping. For a couple of months there, or almost a whole year, we felt it was like never another down day on Wall Street.
It felt that way.
Right, but let's just be clear. Markets go up, markets go down. And so,
We have, we'll get futures pricing at 6 o'clock later on today. Long after we finish the show, we'll get some sense about what tomorrow's price action looks like in just a few hours' time. We'll be back here front and center tomorroar, and look forward to continuing the conversation.
I look forward to
the great
too.
Peter Tuchman. Thank you for joining us here on
Always
the
a pleasure.
broadcast.
Thank you, guys.
Josh will grab your mic. Howie, you and I are going to head for a walk. And appropriately so, we were just talking about the government shutdown there with Peter Tuchman a moment ago. We're bringing the latest event contract odds from our friends over at Polymarket, who are trying to weigh in exactly on this exact question. When will the federal government shutdown end? Right now, the plurality of market participants, 33%, expected to be sometime this weekend between November 8th and November 11th. I want to make sure I'm not walking into anyone. 31% chance it ends past November 16th. Market participants still see this going on for a while. 27% odds it ends late next week between November 2nd and November 12th and 15th. 10% odds it wraps up this week. More than $6 million in total volume contract on that particular event contract. John Thune, leading Senate Republican, he says he's optimistic the government shutdown might end in the next few days. Market participants may be a little less optimistic than Senate Republicans. Howie, we'll take a look at two NYSE notable companies here on the day. How about one of the best performers in the S&P 500? That's Yum Brands, the parent company behind brands you know and love like Taco Bell, KFC, Pizza Hut. Operating and category struggles specifically for a potential Pizza Hut deal, helping drive that stock a bit higher on the day. Yum Brands still up 10% year to date, currently off its 52-week high by about 8 to 9%. Howie, we go from one of the best performers to, unfortunately, the worst performer in the S&P 500. The team from Norwegian Cruise Lines, a beat on EPS, but a miss on revenue. Renewed concerns that travel demand specifically for the cruise lines may be struggling on a backdrop of economic uncertainty. This stock is down 27% since the start of the year. All right, folks, now in partnership with Armor Sciences, FinTech TV's very own Jane King sat down with founder and CEO Colin Gage to discuss all of the ways that the company is saving Americans from the ongoing fentanyl crisis. Take a look.
In recent years, the United States has increasingly recognized the flood of synthetic opioids led by fentanyl not merely as a public health crisis, but as a national security threat. Just 1 kilogram of fentanyl can kill up to 500,000 people, and its analog, carfentanil, which is roughly 100 times stronger, could theoretically kill tens of millions, enough to devastate entire cities with a quantity small enough to fit in a backpack. Armor Sciences is responding to this growing threat with the first preventive immunotherapy platform designed to neutralize synthetic drugs, starting with fentanyl before they can cause harm. Rather than treating overdoses after the fact, Armor's approach trains the body's immune system to recognize and block drug threats such as fentanyl. And joining me to discuss this mission is Colin Gage, the founder and CEO of Armor Sciences. So welcome, Colin, and tell us about Armor Sciences and how you're fighting the fentanyl crisis specifically.
Yeah. So, the nation needs improved biosecurity. We're in this age of AI, and that can lead to the proliferation of new bioweapons. And we're seeing that in the synthetic drug landscape. So, I mean, it's, starting with fentanyl, that's our main focus, given the tens of thousands that are dying every year, the trillions of dollars that it costs the United States every year. But eventually we need to shift and start developing solutions for new drug threats. So we're seeing many of those now emerge. Nitazines were recently in the news and covered very broadly. We're seeing the threat go beyond just the United States, overseas, spreading internationally. So that's our goal, is to really create new preventative, long-lasting countermeasures for these drug threats.
Okay. And we were talking about, I mean, so many people have been touched by this. It's just such a big issue. Now, your signature product is Armor 100.
That's right.
So tell us how that trains the immune system to neutralize fentanyl and related drugs.
Yeah.
Explain how the science of that works.
Yeah. So, just like when you're getting sick from an illness and you have an immune response, basically our therapeutic elicits that same immune response and releases what are called protective antibodies. And those antibodies basically form a biological shields against fentanyl and prevent it from attacking your brain. That's it.
Okay, so now Armor Sciences isn't just about protecting kids from fentanyl, but first responders
Yeah.
are also at risk of exposure. You don't think about that as much. How are you working to protect now?
Yeah, so I mean, we see reports of first responders having overdose events or perceived overdose events. It's similar to the 1970s or 80s, before first responders were wearing bulletproof vests. They were going out into the field unprotected against a potential lethal threat of getting shot. Now they're dealing with these new synthetic drug threats that there aren't any defenses against, and we need to arm our first responders, our military, to the best of our ability. So that's what we're focused on.
Yeah. Now you've also got impressive leadership resume.
Thank you.
What are you doing with the Department of Defense? And there's a team also working with Harvard and Scripps Research as well. So explain all those different things.
Yeah, yeah, thank you. So the Department of Defense, to their credit, or I guess Department of War now, they funded a lot of our early stage research. So getting these trials off the ground was really a big move for us. And we've been working on these for the past 6, almost 7 years. Our product has been shown to block up to 98% of fentanyl from reaching the brain, and 100% of its addictive behavioral effects and its analgesic effects, which is incredibly important because, if you're someone suffering from opioid use disorder, trying to get off the drug, it's important that you have a second chance to basically get better. In addition to that, as you mentioned, adolescents, college students, military first responders, we want to protect that population from an accidental overdose event. And we're seeing that happen all too often now. I mean, in 2022, it was estimated that 22 high school age students alone every single week were killed by fentanyl overdose. It's hard to imagine.
Oh my God, high school children.
Yeah.
So it's absolutely tragic.
That's right.
You expect to IPO
Yep.
either here at the New York Stock Exchange or perhaps at the NASDAQ in the first quarter of next year. So explain that process. What should investors know? How can they follow your progress?
Sure. Yeah. So we're actually in the middle of raising a pre-IPO financing right now. I can't say too much about the listing or the timing, but we have reserved our stock ticker, which is ARMR, Armor, for Armor Sciences. So there'll be more news forthcoming on that front.
Okay. Well, you got the stock ticker, so
That's
it's a
right.
big step.
Getting ready.
Colin, thank you so much. Important work you're doing. Thanks for coming in and
Thank you.
explaining
Thank you.
Armor Science.
Appreciate it.
Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for the latest headlines you need to know in the worlds of fintech, crypto, and AI. First up at this hour, all of the crypto majors, Bitcoin, Ethereum, Solana, they're all continuing to slide in the session as selling pressure grows and the government shutdown heads into record territory. As a matter of fact, Bitcoin falling below 100,000 earlier today for the first time since June. Next up, former FTX CEO Sam Bankman-Fried back in court seeking a new trial 2 years after his fraud conviction. The legal experts say his defense faces a steep uphill battle. And finally at this hour, Big Short famed investor Michael Burry betting 1.1 billion, yes, billion with a B, against the AI boom, taking aim at names like Nvidia and Palantir amid growing fears of an AI bubble. I know Alex Karp had a few thoughts on that earlier today. All right, join us now here on the show on the trading floor of the NYSE. Shubha Dasgupta is the CEO of Pineapple Financial. He joins us now here live on the show. Welcome, it's great to have you.
Thank you so much for having us. Our pleasure.
I interview a lot of companies. Pineapple Financial might be the coolest name that I've interviewed
Isn't
in a
it
very
fantastic?
long time.
I love
First and
it.
foremost, talk to us about your top priorities for the firm for anyone watching who might be a bit unfamiliar.
Well, as one of the fastest growing tech companies in the space right now, we're originating over $3 billion a year in mortgages. Over the last decade, we've been creating a more seamless process to help consumers get into home ownership easier. Digitizing the process, using AI to be able to simplify it and find the best product suited for individuals' needs.
What did you see, or maybe what did you not see that was existing in the broader mortgage space that you felt like you and your team from Pineapple Financial could uniquely address?
We felt the mortgage space was just so archaic. It was so manual, so paper heavy. Anytime you talk to a consumer when they were purchasing a home, one of their biggest frustrations was getting a mortgage. Where do I get this paperwork? Do I have the right interest rate? And our goal was simplifying it. How can we make it easy for them like everything else in this world?
What does it look like to bring mortgages on chain? We're having this big, which seems like a generational conversation of tokenization and stable coins and things moving on chain. What does this look like through the lens of mortgages, you think?
Well, when we look back over the last 10 years, Pineapple has pioneered a lot of evolution, starting from digitization, then entering into the world of AI, and now we're pioneering the world of on-chain mortgage solutions. What does that look like? It looks like more security, it looks like more transparency, and it looks like more speed. So I think we've built an incredible foundation upon which we can continue to develop and improve upon on-chain.
To the point of transparency, from so many business leaders I've interviewed this year, they said it's such a remarkably different conversation given where regulations have changed in 2025. The rules of the road are much more clear to do business for a lot of enterprises. Have you similarly seen that, and what further needs to be done in the regulatory space, you think?
Yeah, and that's exactly why we decided to get into the space now. We've seen over the last 6 months a lot more framework being established, a lot more regulatory flexibility, let's call it, and it was an opportune moment for us to begin really entering a space that we felt had a very bright future. I think from a regulatory standpoint, there's still a lot of work that has to be done, but businesses like ours, alongside others and our peers and competitors, have to work with them to ensure that we're hand in hand pursuing what's right for the environment, the economy, and the end consumer at the end.
Before I let you go, give me your overall outlook, your guidance. What's on your radar for 2026, specifically as it impacts your work at Pineapple?
Well, we have a lot on the plate right now. In about 5 weeks, we're going to have a lot of incredible launches. We have our V1 product coming out for mortgage solutions on chain, which is very exciting. We're continuing to build out a DAT strategy, working with our partners at INJ and the Injective Foundation on building on their financial first blockchain. So in the coming weeks, you can expect a lot of news from Pineapple.
Shubha Dasgupta is the CEO at Pineapple Financial, the coolest name in town, I got to say. Thanks a lot for being here, my man.
Thanks
It's great
for
to
having
have
us.
you. We'll
It's
do it
our
again
pleasure.
soon, folks. Don't go anywhere. We got much more Taking Stock coming up, still live from the New York Stock Exchange, including the latest on startups, raises, and rounds, plus an interview you do not want to miss with Scott Davis of Capital Group. More Taking Stock after this. Let's do it. Welcome back to the broadcast. We now bring in the latest news you need to know in the world of startups, raises, and rounds on this Tuesday. First up, two startups, Vulcan Elements and Re-Element Technologies. They're securing a $1.4 billion deal with the Trump administration to build a U.S. rare earth magnet supply chain and cut dependence on China. Next up at this hour, the ongoing bidding war over weight loss drug startup Metsera is heating up, with Novo Nordisk raising its offer to $10 billion, which tops the previous $8.1 billion bid from Pfizer. And finally, NVIDIA now teaming up with Goldman Sachs-backed startup Spectro Cloud in a new $750 million partnership aimed at solving one of AI's biggest problems, wasted GPU power. All right, I'm now joined down here on the trading floor by the man himself who just rang the closing bell. Please welcome Scott Davis. He is head of ETFs at Capital Group. Welcome. It's great to have you.
Thanks for having me.
I love interviewing people who just did the bell. I mean, I feel like that's got to be so awesome. I've been doing this for a long time. I look up, it looks awesome. What was the experience like for you and your team?
It's a wonderful experience, and it's so exciting to be back on the floor of the New York Stock Exchange, celebrating the 25 U.S. listed ETFs that we at Capital Group have brought to market. It's wonderful. The energy is great, and we're so glad to be here.
In what ways have you seen the broader institutional but also retail investor interest in the ETF space really heat up? I feel like early in my career, something we talked about from time to time, now you don't go very far without ETFs being crucial to every conversation here on Wall Street.
Certainly. We've heard from advisors for a long time that they were looking for more options in ETFs. What started as institutional instruments for exposure have now truly turned into active investments for long-term investors. And Capital Group is honored to bring our over 90-year investment history into the ETF vehicle with actively managed ETFs across equity, fixed income, and multi-asset strategies. Advisors have gravitated towards them. We're approaching $100 billion in assets, and the feedback that we've gotten is really strong and positive.
I have no doubt. Scott, this is probably an unfair question, probably like asking you to tell me your favorite child. Do you have a favorite ETF?
You're right, it is an unfair question.
I had to ask it, though, of course.
We have seen advisors gravitate across our spectrum, equity, fixed income, and multi-asset. But I will tell you that one of the most exciting things that we've had most recently is we launched all active ETF models from Capital. So I don't have to pick a single ETF as a favorite child. We bundled those together for advisors to use for a range of investor objectives.
That is the right answer right there. Talk to me about some of the ways that you've really seen ETF interest continue to evolve here in 2025.
Sure. I mean, biggest trend in ETFs is clearly actively managed ETFs. What was a small part of the market, 2% in 2019, has now turned into 11% of assets under management. So active is really growing quickly, and that's behind 40% of flows going into actively managed strategies, and nearly 75% of new strategies being brought to market are actively managed. And so when we see that, we get really encouraged, because what we do, all active, all actively managed strategies, research driven, and thinking about the investor's long-term objectives.
When you're deciding kind of the active ETFs to kind of bring to market here, how much of that is listening to real-time feedback from people who are telling you that they have that interest in those underlying products versus how much of that is just you having a sense to know where the puck is going before investors tell you that they're interested?
So we're always looking at ways that we can help long-term investors achieve their goals. And we tend to think about which ETFs to launch in the context of a portfolio. So if your objective is capital appreciation, if it's income, we're going to think about which ETFs can be launched for that. And today we were celebrating the listing of 3 ETFs that really fulfilled a specific need that we heard clearly since launching, which was we need more focused building block strategies. So CGGG, CGVV, and CGHY, our value, growth, and high yield strategies, offer that more focused exposure for clients who like to really control their allocations.
Scott, as if the offerings themselves weren't impressive, the fact that you can keep all those ticker symbols in your head at once, that might be the most impressive thing we've had on the show. Scott, thank you very much for being here. Congratulations on ringing the closing bell. Grateful for your time on the show.
Thanks for having me.
All right, you got it. Folks, don't go anywhere. Much more Taking Stock coming up after a quick break, including the latest from Money 2020's Chief Strategy Officer, our good friend, Scarlett Sieber. More Taking Stock coming up after this.
Welcome back. I'm Scarlett Sieber from Money 2020, and we have another segment of Hindsight 2020. And I'm back after the unbearable cliffhanger we left you with around Y2K. Moving on now to the Dow Jones Index reshuffle. Again, not a dance unless Steve Ballmer has any ideas. What it is and why does the Dow Jones and why does this matter? To fully understand this, we had to start with our last segment on the Y2K. Basically, uncertainty and fear were rampant. As a panic was mounting, the Dow Jones Industrial Average made a big, huge, gigantic decision to do something dramatic. On that special day of bravery, November 1st, 1999, with panic everywhere, the Dow makes a seemingly simple decision. They swapped out 4 industry giants of that time, Goodyear, Sears, Chevron, and Union Carbide, for these hot new kids on the block you just might have heard of. It was one in, one out as the last generation exited the Studio 54 of finance. The Dow added Microsoft, Intel, Home Depot, and SBC Communications. This wasn't a mere signal towards technology stocks becoming a major focus of the Dow. It was the execution of a new strategy. They did the darn thing. The move to technology stuck. Today, the Dow still defines market sentiment, even though most of its industrials now build code and not cars. It's a new age of manufacturing, and it is changing. So next time someone says the Dow's up 300 points, you know more about how the Dow evolved and how to win friends and influence people. We're here to provide value, folks. And with that, back over to you.
Welcome back to the show. I'll give you a quick update on the way that AMD has been performing after reporting quarterly earnings. A lot of downward pressure on that stock today here on Wall Street, falling in the session, down 3.7%. Right now, after hours, that stock is down an additional 2%. That sets the stage for no shortage of quarterly earning reports. Tomorrow morning, we get Novo Nordisk as well as McDonald's. We love the team at McDonald's. Tomorrow, after the bell, oh man, we buckle up for this one. Robinhood, AppLovin, Qualcomm, Snap, and our friends at Figma. Only the second quarterly earnings report for the team at Figma since launching their anticipated IPO back here at the New York Stock Exchange on July 31st. That's going to do it for the entire Taking Stock team. We'll be back tomorrow at 4 o'clock with a brand new show. Have a great night, and we will see you tomorrow. Woo!